Hello, welcome to European Open Briefing for Wednesday, April the 4th. I'm Rafi Boyajan, currency analyst at XM.com, and we're going to be taking a look at what's happening in the currency markets today. The US dollar has come under pressure again over escalating tensions between the US and China over trade. The dollar did get a bit of a respite yesterday following a strong rebound in US stocks. And it did manage to extend those gains early in Asian trading, but has now started to come under pressure, particularly against the yen. Risk sentiment is also being weighed by, so far we're seeing weak PMIs across the globe for the month of March. We had service PMIs out of Asia this morning, and the Eurozone and UK service PMIs are due tomorrow. The Australian dollar is one of the few outperformers. It did get a lift by stronger than expected retail sales out of Australia, offsetting those weak PMIs out of China. And the Canadian dollar is also doing well. It managed to rally to 5-week high on hopes that the NAFTA agreement will soon be successfully renegotiated. So let's take a quick look at major currencies and equities. We can see the dollar slightly down against a broad basket of currencies. Against the yen, though, it's down by 0.5%, just above the 106 level. The euro and the pound are just slightly positive. The Aussie has turned low now after strong gains early in the session, but the Kiwi has managed to hold on to its gains. We can see gold is on the up again as risk sentiment falters again. If we look at equities, we can see those strong gains in the US yesterday, but in Asia, major equities were mixed, and we're seeing a negative open in Europe at the moment. So let's turn on to the US dollar now. We can see dollar yen had managed to rise above 106 actually came to close to 106.70. Earlier it was trading around 106.50. Now it's fallen further to around 106, falling below its 21 period exponential moving average. Dollar index, though, is not doing as bad as dollar yen, is holding near 2-week highs that it reached yesterday. So the latest developments on the trade front are that the US has issued a list of 1,300 Chinese products, which the US wants to impose tariffs on those products because it's accusing China of not following fair practices on intellectual property. China has retaliated against the earlier tariffs on steel and aluminium, publishing a list of the US products China is targeting, and will also now retaliate further on the latest list of products, which are of course much larger, amounting to around 50 to 60 billion US dollars. We're going to see whether or not the two sides will manage to negotiate some sort of a compromise, or whether this is going to escalate further. But yesterday there was some positive momentum in equities. At least we saw the S&P 500 rising above the 2,600 level and above its 200-day moving average. The main relief yesterday came after the White House said that it is not planning any action on Amazon. President Trump had been tweeting several things against Amazon, accusing the company of basically not charging enough not paying enough to the US Postal Service for its deliveries, and so that did boost US equities yesterday, but now didn't really do enough to boost European and Asian equities this morning. So the focus will then be on US data. We've got the ISM non-manufacturing PMI later today, but the big ones will be on Friday. We've got the non-farm payrolls report for March, as well as a speech by Fed Chair Jerome Powell. Let's now turn to European currency currencies, we can see the single currency, the euro, continues to drift lower for much of the week. It actually fell to near 2-week lows yesterday, just about 1.2250. So the euro is being weighed by weak PMIs out of the Eurozone over the past couple of months. We saw the manufacturing PMI easing, and we've got the service PMI coming up tomorrow, as well as the flash Eurozone inflation numbers later today. But for now, there doesn't seem to be enough to give the single currency any positive signal, especially after recent comments by ECB policymakers, which have been fairly dovish. The pound, on the other hand, is not doing too badly, although the pound had fallen late last week. It's managed to inch upwards. We can see it's currently trading around 1.4050. We did see a better than expected manufacturing PMI out of the UK earlier this week, and we've got the services PMI coming up tomorrow. Also for sterling, we are seeing those Brexit fears subsiding substantially since that transition deal was reached. Looking at the Australian dollar, we can see the Aussie jumping higher earlier today, reaching a 1-week high of 0.7717 versus the US dollar. That came after retail sales in Australia jumped by 0.6% month on month in March, beating forecasts of just 0.3% increase. All this more than offset a larger than expected drop in building approvals for March out of Australia, and those disappointing PMIs out of China. The services PMI fell to 4-month low in March in China. It follows the weaker than expected manufacturing PMI we saw on Monday, but the retail sales numbers seem to be enough to be holding the Aussie around the 0.77 level. The Kiwi is also not doing too badly. It came close to reaching the 0.73 handle. Basically, the Kiwi was helped yesterday by the bi-weekly dairy auction, which, although we saw prices falling for the 4th consecutive auction, the decline was far less than many had been anticipating. And also there are some signs that dairy prices are about to turn positive, so that's currently helping the New Zealand dollar. The Canadian dollar is also another commodity currency doing well. It rallied to 5-week high of 1.2771 versus the US dollar. We can see it has eased at the moment to around 1.28. So this comes after reports suggesting that the US, Canada and Mexico are very close to reaching a deal on renegotiating the NAFTA agreement. Some reports suggest that a deal could be announced by President Trump. A preliminary deal could be announced as early as next week, and there's been positive comments by the Mexican minister. We had seen the loonie coming under pressure last week from a surprise drop in monthly GDP for January. That data had reaffirmed expectations that the Bank of Canada is not likely to raise interest rates soon, but if we do see a NAFTA deal, that view could alter very quickly and could potentially help the loonie make further gains. Looking at today's economic calendar, we can see that Aussie data there, as well as the Japanese PMI alongside the cash in services PMI, all of them easing in March compared to February. The Eurozone flash CPI is out shortly, as well as the Eurozone unemployment rate. In the US, we're going to have the ADP employment report ahead of that non-farm payrolls report on Friday, as well as the market services PMI and the ISM non-manufacturing PMI, plus a speech by Cleveland Fed President Loretta Mester. That's it from me. Thank you very much for watching and have a great day.